Today, guys, we're gonna be going over California Dream for All program and the Fannie and Freddie first-time homebuyer alternative. Peter, did you want to do all go first, do all, or proceed as we discussed?
I wanted to go over the Dream for All and the first-time homebuyer just in case the Dream for All buyers are not qualified.
Yeah, okay, go for it.
Limit doesn't pass. However, I don't think I can wrap both options into 25 minutes.
Okay.
So what I encourage all of you today is to go over the content that I shared last night about the Dream for All. The company have exceeded 200 applicants within a week, 1 week, using the slideshows. So what you can do, what I recommend you to do, is to either use this slide, educate the Gemini, create shorts, reels, and upload it, or engage with real estate companies and tell them that we can originate. Surprisingly, what had happened earlier with a lot of Korean lenders or loan originators using DR endorsement is going through, I guess, some kind of licensing difficulties with CalHFAs. So just letting them know that we are here to originate, to help, get another chance. So I'm going to go over some details about first-time homebuyers definition and what kind of strategic approaches that we can take as a team in case the CalHFA Dream for All's income limit passes or qualification doesn't match because of the first-generation buyer. Do you see my screen? Great. So team, today, it's not about rates and programs only. 10-year Treasury bond is going against what we have seen before. We are going to talk about the strategic lending blueprints, some options that we can share to the market, where everyone is fighting for the same lead. And we are going to master the hidden rules of AMI, area median income, the grants, and first-time homebuyer programs to dominate. So the standard lending is available everywhere you go. If you're waiting for the phone to ring, you're ready to, just talk to, individuals, waiting for the leads to come in, you're already behind. The baseline of Giving Tree's loan officer just knows the program exists, but the high performers that we are seeking to become masters the guidelines to pre-qualify on the very first call. Today, stopping to receive, taking the orders, and leading to start making decisions will help you to become a friction remover. So number one matter that we need to focus is how we delete and omit the price hit. When we run the pricing engine, when we don't put in the income, it will show both options. The first-time homebuyer Fannie and Freddie Mac and the regular Fannie Freddie Mac product. So this is regards to the FHFA waivers. While your competition is quoting loans with 1.5 to 2% in LLPA fees, which is related to higher down payment, lower rate, lower down payment, higher rate. There's a specific margin that we have to charge. We can use these waivers to get the pricing back to the par. This is a massive 0.5 sometimes to 0.75 price advantage. To hit this, we have to look into a borrower with FICO 680 or above, 3% down or more, and income at or below 100% AMI for the standard and 120% for the high cost areas. So this rule applies with Home Ready and Home Possible loan when the AMI is below 80%. And for the down payment system programs, the total household income determines lower income or moderate income. So these are the information that you can find on AMI search. Los Angeles counties use the high cost, which gives you $11,350 along with Orange County. San Francisco, San Mateo, one of these Northern Californias use different income limit. So we can go up to $16,810. In Georgia, Gwinnett County or any other counties uses 100% AMI. The total income limit within the county is not as high, but we can still use the 100% AMI rule. So when the monthly income is lesser than $9,458, we can omit all the LLPA options. So if this person has, let's say 6.5% 30 years fixed loan, we can remove all the LLPAs and start giving them 5.625 to 5.75. And this is where we can make extra margin, or we can give back extra surplus to the borrower as a lender credit. So knowing this hack will lead us into what determines the qualification. The $1 rule applies. So if you see this chart, earning just $1 more over the limit kills the deal. So you lose the LLPA waivers and the reduced MI. You must calculate the overtime and bonuses exactly. And this miscalculation in the middle of escrow can become a disaster. So specifically diving into the difference in between Fannie Mae and Freddie Mac shows us into these two charts. Rules apply very similarly, but the major difference will be the minimum credit requirement and the borrower income. If you are renting one of your rooms to use as a qualified income, you can go to Fannie Mae. But Fannie Mae with 2 to 4 unit purchases requires your personal buyer contribution, whereas Freddie Mac does not. And Freddie Mac also allows you to do 15% down on an investment if you run the DU and LP. You'll see the distinct differences. Understanding the AMI can lead into multiple products like this. So learning the Freddie Mac, that we can encourage these buyers to get into this house hacking, buying 4-unit property, occupying in one, and use 3 rental unit income to qualify. And AMI of 80% can apply in San Bernardino, Riverside, and all the other counties as well. So there's good and bad. The good part is all about the payment reduction, and the cancelable AMI significantly reduces than regular MIs. But the con is the AMI cap is so shy that we can go above $1.2 million with unit properties. And single family seldomly brings us down to maybe $650,000 to $700,000. DU and LP has to be ran, and we have to receive the proof eligible. And this is only for the primary residence. So we talked about definition of the first-time home buyers. Anyone who had not claimed any principal residence in the last 3 years or did not have any home ownership in the last 3 years can also jump into and combine the AMI regular conforming with these down payment system programs as a silent second or silent third. CalHFA Dream for All, the one that we mentioned earlier. And the second, Wish and Empowered are paused at this time, but Greenline is still opened. Any purchase transaction in LA counties can receive $35,000. And deferred loan amount, LIPA, MIPA, HOP, Ontario, Garden Grove, one of these city level and county level down payment assistance. So just briefly talking about the Dream for All product, we borrow 20% or $150,000 of the sales price from the CalHFA, and we repay back when you refinance for the second time as a ready term, or refinance cash out on the first time, transfer of title, and sale. And this also needs to be applied with first generation buyer. So it is encouraged to have multiple buyers applying at the same time. So one of the tactics that we can apply is when both, or when let's say assume 4 different people applied and all 4 are first generation buyers, we can encourage them to apply 4 different applications. And if one of the 4 gets accepted, then that person can become the primary buyer and 3 becomes a co-buyer and submit the application at the time of the voucher. I'm not going to go too much about the down payment system programs. Please review the DPA Excel file that we have. I updated yesterday as well. The major criteria updated yesterday was regards to the green card holder versus the visa holders, which qualifies and which one does not qualify. Regards to this, one thing that we just had an update is whenever you have a client who doesn't have a green card but applied for the green card application, if the applicant shows us the status showing pending on the USCIS homepage, then we can consider this applicant as a green card holder and apply. The definition here is, will this person a permanent or temporary? And can we document this on a USCIS homepage or not, or green card or not? So whenever we talk to the borrowers, we first need to check their total household income to find out which direction we take: city level, county level, or state level down payment system program. Or and second question is, do we has this person or this parent owned any homes in the United States for the last 3 years? So if this person had a home in let's say this parent, if this borrower's parent had a home in Mexico 2 years ago and moved to California, then this person becomes a first generation buyer because U.S. Personal tax returns does not show the homeowner's interest information. And target zip code is needed is because we need to calculate the county AMI on top of the city down payment system programs. This filters you the direction as well. So whenever you see the underwriting guidelines, these things will continuously pop up. First thing is a CLTV, combined loan to value. Many down payment system programs allow you to do 105% CLTV, which means when a Dream for All regular buyer applies, they will get 80% loan to value, which has a payment, and 100% CLTV because 20% down payment was granted from the CalHFA. But if it's CalHFA Dream for All in LA County, then we can add Greenline next to the Dream for All, behind the Dream for All, the silent third TD. So CLTV can go up to 105. Second, VLIP. This is very low income with anyone has 50% AMI or below, we receive first-time home buyer closing cost credit. Border income is the rental income from a roommate. This requires 12 months of shared residency history to use on the home ready when we're going into Fannie Mae. First generation defines, when we talk about the Dream for All. So 7-year rule applies for the first generation. 3-year rules apply on the first time home buyer. So whenever we receive an application, go into or dive into this, these questions. Is your credit score above 660? How can we know? Can I see your screenshots on your Credit Karma, or can we pull the soft pull or hard pull to identify? Second, have you completed any 8-hour course in the last 12 months? If so, then we have to retake it. If not, then let's take it. Let's encourage them to take it when we apply these programs. And the debt to income ratio needs to be below 45 to apply all the products. When it goes above 46, in between to 50, then most of these down payment system programs, city down payment system programs, will not be qualified. Only the county level, state, or Fannie, Freddie Mac will only apply. So the takeaway today is I want all of us to pick one product that you like from this deck and reach out to 3 agents. It could be calling out the listing agent within the county, or it could be one of these specific products that you liked, making into an email or shorts and reels and flyers and starting to post. Any questions about the content that I shared today?
Yes. When it comes to assets, I believe there's an asset cap, correct, to most of them?
The buyer contribution requirement applies to 1 to 3%, but as the earnest money deposit requirement is usually 3%, I start the conversation with 3% down minimum and credit score at 700, because who knows which product we're going to jump into.
Yeah, I have a borrower.
Except the DPA and MIPA, these two products are the only one that you must use 80% asset rule. If you have too much money, you're not going to get the funding, but all the others don't have that.
Yeah, I have a borrower who he wants to put $100,000 down, and he has $200,000 in his bank account. And he was looking into down payment assistance, but I think the only one that would allow it would be the GSFA one. They don't have an asset cap.
So this is not LA County nor Orange County.
Mm-hmm.
Yes. If so, then yes, GSFA is the only one.
Okay.
Peter, I have a question. So last year with the California Dream for All, everyone had to take the 8-hour course or home buying course and then register for the 1-hour California Dream for All counseling. Is that still the case this time around? That was the only thing I didn't see.
Yes.
Okay.
So
And,
anything that was used last year, we can reach out to the same company, or there's a promotion going on from Shalom Center starting February. They're gonna give, instead of paying $150, they're going to only charge $50. So it's going to happen maybe in 2 to 3 weeks.
Okay.
They have this AI module where they can just get the 8-hour course done overnight.
Now, my understanding is, doesn't CalHFA themselves directly provide that too, or no?
No, they are teamed up with E America. That's another education company.
Gotcha.
I think they charge $99.
Oh, okay, that's what it was then. Yeah, okay.
And after that is done, the 1-hour consultation link will be given. From last Friday, when I was accessing the link, it was giving me a 1.5 week delay. So voucher is going to open, what, in 3 weeks now from today? If your buyer is serious, we have to educate them. We have to let them, at least have a chance to apply. The 8-hour course and 1-hour Dream for All, the certificate is not a requirement to submit. But when I remember in 2024, some of the voucher receivers didn't get to use the funding is because of the 1-hour education. They didn't have the 3. So the voucher is received and they can use it for the first 90 days and they can extend it for extra 90 days. But within the 90-day period, they could not get an assignment. No one was available for that call. So he had to let go of these homes, and then finally he got hired and he just didn't use it. Surprising things will happen. So many unfortunate news will come up. So we have to, what I told my buyers and agent back then was that I was telling them it was my fault. I was letting them down because I didn't express how important it was to get it done earlier when we can. Any other questions? If not, please refer to this slideshow along with the Dream for All slideshows. You'll be amazed. There are a lot of loan officers are using 2023 underwriting guidelines as well. If you YouTube them, then I can easily find 5 videos using wrong information. I don't know why they're doing it, but this is the perfect chance for us to get in, telling them that the proper information is showing on government homepage. I'm just shocked that these realtors are not even bothered to, cross-check their information on the government homepage. So mostly they're talking about, or a major difference will be the definition of the qualifying aliens. Qualified aliens definition in 2026 does not include anyone but green card and citizenship. So, yep, that's it for me today. Let's wrap up a little early as we have no other questions. If you have any content that you want to go over as a team, please let me know in advance. And if you have any details that you would like to share, win for the week, that is helping all of us. I know how hard Ragnar worked yesterday to get this borrower qualified. But because of it, he's saving 2 relationships, the borrowers and the realtors. And it will lead more and more. Now, this is engraved in his brain. So whenever something like this come up, then he can immediately reach out and determine where to go. So yes, have a great day, everyone. And I'll see you guys all next week. Thank you.
Thank you.
Bye.
You're welcome. Bye.